Felix here. Good morning to you after the long holiday. Well, we've got some news for you, and I'm going to run you through it, break down the key data points for you so you're the best informed investor out there so you can make more money. That's what this is all about, in case you were wondering. Now, YouTube just said to me, this would be a good time to insert an ad. I think we'll skip that because that's not what we're here for. Winston back there snoozing very soundly. He already knows the information. He's done all the research with this big nose. Now, what isn't the thing that we are on the cusp of collapsing? Well, it isn't Elon Musk who said today on his X that unless he gets 25% of voting rights and he only owns 13% of the company, he is not comfortable developing AI and robotics inside of Tesla. In which case, Tesla would be a car company, which would suck. So he's basically putting pressure on the board to give him double voting rights, which isn't unusual. The Zuckerbergs have them, the Palantirs have them. It's entirely possible. But it would mean changes to whatever, and the board has to approve it. Shareholders probably have to approve it. I think shareholders would vote for it in a heartbeat because, well, we want the AI and the robots to stay in Tesla and not become a separate business. So that's one thing today, but that's not actually it. It's also not Jim Kramer saying that Donald Trump won't win the Republican caucus in Iowa. Is this man ever right? Ever? And is he just on TV because it's entertaining that he's permanently wrong, or what is it all about? No, it's not that either. It's not about the World Economic Forum either, and this is an actual photo from inside one of the meetings, in case you were wondering. No, it's not that either. It's also not the fact that you haven't yet signed up to our live trading training, which takes place in exactly 58 minutes as I'm recording this live, or live streaming this live, where I'll teach you how you can trade one stock with 3 simple rules. We'll do live trading together, and I'll show you how we made $3,492 last week doing 4 trades, which took me literally less than an hour. So if you want to learn how we do that, felixfranco.com/webinar. There's a link at the top of the screen somewhere in the description, likely as well. It's also not the fact that groceries have gone up by a whopping 25 percentage points since the end of 2019. Inflation is gone. Well, inflation sticks around. It's just it doesn't accelerating as quickly as it once was. No, it's not that either. It's also not the fact that half of all office loans are at risk of default. I think it's about 44%. Almost half of every office building out there that's got financing on it is at risk of default. That's insane, right? I mean, really insane. And that's not, CNBC coming up with it. It's the National Bureau of Economic Research. Does it get any duller than that? But that's not it either. That's not the terrible news. It also isn't the fact that every single time when you've done aggressive rate hikes, you get a recession. No, it's not that either. It's historically a complete fact that you always get a recession. But no, it's not that either. There won't be a recession this year. Papa Biden said there won't be a recession. And then he tried to figure out which direction to walk off the stage. It's also not the fact that insider transactions, sell-side transactions, bearish transactions, which means people who work in senior management at listed companies are selling, well, more shares than ever before. Not quite, but certainly more than at any time in the last year. And I mean, not a little bit more, but like 6 times more. This January, they're selling like mad, absolutely mad. And if you thought it was something to do with taxation, well, last year they didn't do it. So no, it's got nothing to do with taxation. It's got a lot to do with our stocks are really expensive, darling. Shall we buy that other boat? Shall we build a bunker on the beach in Maui? Zuckerbergs? It's that kind of thing. So they're getting out. Now it's actually this. The most exciting chart you've yet to see in your short but glorious life. The kind of thing that you might want to screenshot and show your better half, because he or she will think you're incredibly interesting. And it is the cumulative aggregate excess savings. Shoot me now, right? What does it mean? Okay, so what have we done during COVID? Well, not we, but the US government, in its infinite wisdom, pumped a load of money into, and the Fed, into consumers' pockets, about $2 trillion, something like $2 trillion, 2.1 trillion. And also, the consumer wasn't driving to work. They weren't wasting their money at Starbucks and sandwiches and all the usual nonsense they buy just to get themselves through the workday. No, they actually had a glimpse of what life could be like, well, without the masks and lockdowns and compulsory vaccinations, if life was actually free. And they've held on to quite a lot of that money, and those excess savings, as the Fed calls them, which tells you something about the warped nature of their mind and the inability of some of viewers to hit the like button, which I truly appreciate. Thank you very much. And right now, these excess savings are nearly exhausted. So we're estimating that by about March this year, that figure will go to zero, which is where it was pre-COVID. And what does that mean? It means this buffer that gets us through every bit of bad news out there, higher gas prices and whatnot. This means there isn't that buffer anymore. So the consumer's ability to bail out the US economy will be severely restricted because they'll just be out of money. Now, is that the worst news of the day before we look at the live market? Not quite. 56 million Americans have debt on their credit card for at least a year. Oh my freaking God. At least a year. There's a reason. What's the guy called? Don't have a book of him somewhere yet. There's a reason Dave Ramsey makes a lot of money, because 56 million Americans need to buy his freaking book and actually read it. Don't have to. Credit cards are brilliant. I love my credit cards. I've got like 10 million Amex points, which I've just spending, which is brilliant. All the first class flights for the year basically are free. It's amazing. But of course, I pay the bloody thing off. In fact, I pay it every week because I don't like the balance to go up. Every week, every Monday, I pay my Amex credit card off. Same thing, please. And what, of course, makes it worse is that half of all credit card holders, half, have not paid off their balance at the end of the month. Oh my God. I mean, if you think Dave Ramsey has achieved something, sorry, Dave, we've got a lot of work cut out for you here. And that's up from last year. It was 46% last year. So they are just paying like 20, 25, 30% interest because either they are just malinformed or they don't know where else to get their credit from. And it gets worse. And then we get chirpy again. Don't worry, we will get cheerful. I'll show you Winston and it'll make everything all right. Buy now, pay later is expected to massively boom. One of the reasons I like PayPal. This last year, it was about $943 billion. And that's going to double in the next 2 years to $1.8 trillion. And that's debt you can get once you maxed out your credit card. Seriously. And it's just another form of debt. And it appears sort of interest-free, but there must be obviously a problem with it somewhere. So this is expected to explode, and it'll be the debt bubble on top of the debt bubble on top of the debt bubble. It really is insane. Get rid of all your consumer debt. If you're going to do one thing this year, get rid of your consumer debt and get yourself another income stream. And I can help you with the income stream. We'll talk about that in a second. But there's just one more little thing here. I'm going to make this chart really big because this is what's going to change this year from potentially, oh my freaking God, the consumer is out of money, to, aha, we're going to get bailed out again, aren't we? Yes, we are. We're going to get bailed out again. So there is something called the overnight reverse repo purchase agreements, which is even more sexy than the thing I just read out above. And that is a bailout from the Fed to regional banks who were mismanaged and managed by a bunch of nincompoops. And that is now only got 400 billion left. And you might think 400 billion is a lot. It's not. Sorry to say, it isn't. This will go to zero about the same time the US consumer runs out of dough, and around about March. And that is why the Fed will stop shredding money in March. Whether or not they give us a rate cut, I think it's a slightly different story, but not shredding money is kind of the equivalent of a rate cut. So the market will actually quite like it either way. And they'll come up with another way of bailing out these banks because they really have to. And JP Morgan already knows it. They just put this out, North America Fixed Income Strategy paper from the 12th of January. And it says it's all over now, QT, which is quantitative tightening, money shredding. We now expect that the FOMC, the Fed, will have the outline of a timeline at the January meeting, communicating mid-February minutes to that meeting. What have they said in that sentence? Can somebody tell me that? Nothing, right? We expect, this is the summary, by the way. We accept this plan will be formally agreed to at the mid-March meeting, and it'll be implemented beginning in April. So basically saying they will stop shredding or reduce shredding money initially and will then stop concluding money shredding sometime during 2024. And if this is communicated, so we get to hear about it, well, JP Morgan seems to know, and then that'll be a bailout again. We'll get another bailout. Isn't that lovely? Bailout after bailout after bailout. There's no risk, folks. Just make more money, invest it. Come and look with me how you make more money, by the way. You do need a little bit of capital for this. It makes most sense if you've got like 10K plus, to be perfectly honest with you. Trading really starts to become fun when you have $10,000 plus in your stocks or cash or, in the mattress. And I will teach you in literally 48 minutes how we trade one stock, 3 rules, 75% win ratio, and it's live. We'll do some live trading together. You get to see the whole thing, and it'll be fun. And Winston will be here too, which is, of course, extra fun, right? So there we are. Sign up for that before spots run out. And let me see any of your questions, folks. We'll run through it. Good morning from sunny Arizona. Good morning from Colorado. Good morning to you. Sunny Wolverhampton. Is that a joke? I used to work for a company for a little while that was in Wolverhampton, Carillion. Well, not really work. I was lent out to them as a lawyer, junior lawyer. They sent me up there occasionally. And yeah, the architecture in Wolverhampton is something. The people are very friendly. The people are lovely in the Midlands. But I don't know what happened to your architecture. Was it the Germans? Did we bomb it all? Maybe we did. Just hit the like button. I appreciate that. The world is, in fact, totally corrupt. I think that's completely true. Debt-free since 1976. Andrea, congratulations. Brilliant. I love that. Do you tend to leave your long-term stocks alone, says Suroki? Yes. And actually, I've got a video coming out today on my entire portfolio. You get access to all of it. You can see it all. And I tend to pretty much just add to it. Occasionally, something falls on the chop. But you need to, what I'd really recommend you do is write down when you're going to sell something. And that's a hard thing to do, but that's the most important thing. So when you buy the stock, write down what's the gross margin, what's return on capital employed, what's the earnings per share growth, and then track once a quarter how those things are moving. And I know it sounds a little tedious, but how much time do you spend earning that money? Like what, 8 hours a day, 10 hours a day, 12 hours a day? Like a lot, right? So why wouldn't you spend 5 minutes per stock every 3 months to actually track it, right? So please do that. Do it in a notebook or a spreadsheet, wherever you want to do it. Google has all the data. It's all free nowadays. Brilliant. And then you actually know whether a stock's going to get better or not. And then you know whether you might want to sell something or not, right? So Carl says, don't mention the war. I think you got away with it. Indeed. Yes, I think we got away with it. Indeed. Love that clip. I wonder, is that clip allowed in Germany? I'm not sure, because the salute of a sword is actually banned in the fatherland. It's illegal. So I don't know if that clip is permitted, but you should watch it. Germans could do with some more humor, don't you think? What do you think about McDonald's stock? I think it's fairly decent. But look at the gross margins. Look at their profit growth per share. Look at that as a starting place, and you'll get somewhere. And watch my next video that's coming out today. How do you decide which credit spread to use against SPY, says CSL? Come and join me, seriously. In 44 minutes, I'll walk you through the entire rule system, and we'll actually set up a trade so you can see live, like, how I set up the trade, why I set up the trade, and at what price point. So come and join me over there. Any good Canadian stocks? We covered one last week. What is it? Circle K's parent company. I can never remember the name. I think that's a pretty decent business, actually. That's Canadian owned, I believe. Carl, do you know they poked Manuel in the eyes? Yeah, I think he's a bit of a. I mean, not Manuel. What's his name? Is a bit of an unpleasant character, I think, in real life. So yes, I think he tortured Manuel quite badly, but it was very, very funny, so it was worth it. What about the New York manufacturing reading at 43.7? Does that mean a recession is inevitable? It's a manufacturing recession, yes. The other recessions are being covered up as we speak. So yes, I would say, I think we've in many ways been in a recession. It's just we've been lied to so much about jobs data to keep certain people in office, which I suspect probably won't work if you look at the orange ones numbers from yesterday, the Donald. My feeling is, and I have no personal interest in US politics other than what it does to the market. I suspect Trump will be back, sort of Arnold Schwarzenegger style, which will be, well, it'll make life more interesting, won't it? Yeah. So what stocks do you prefer? Dividend stocks or something like Apple? I'm not a big fan of dividends. It's very tax inefficient. It's very valuation inefficient. Made some videos on that. People never like it because people have been sort of brainwashed to love dividends. I would prefer, generally, I think it's more efficient to sell stock rather than receive dividends, especially if you're reinvesting. It makes just no sense. But Mark says no, it'll not make it more interesting. Yeah, you can really trigger people if you talk about Trump, right? One way or the other. Strong feelings is what he triggers. And I think that's the strength of his PR machine. He's just the loudest person in the room. And typically, the loudest person in the room gets the most headlines and therefore wins, unfortunately. Well, or fortunately. I honestly don't particularly care either way. I don't live in the US, so I don't get to vote. David, verticals are different in my broker. Should be the same. If you put in the same, if you go on Options Watch and you use the same strike prices for buy and sell, you'll get the same trade. Now, they might display it differently. Are you sure you're buying and selling them the right way around? Maybe that's the right. Are you sure your expiration dates are the same, for example? If those are, then you'll get the same data. How much should be used last week for that $3,492? That's a very good question. I have to update, which I haven't done yet, Tim. I have to update my spreadsheet, which I haven't done yet. It's a very fair question. I'll answer it for you probably tomorrow. Let me update the spreadsheet. It'll calculate it for me. Like button, are you all in? I see 200 likes, but 700 watching, says Mai. I appreciate that, Mai. Thank you very much. Are you concerned about commercial real estate? Yeah, I think commercial real estate is a shit show. And it's being carried by the regional banks who are not calling in the loans on when they should, because the value of the real estate has dropped to below what it's worth, because they know if they do that, they're not gonna, they get the property, they then have to auction it off and they'll get like 40 cents on the dollar, which means they'll be like, the banks will be insolvent even more than they are right now, and they'll get bank runs. So at the moment, everyone's just going, just don't move, just don't tell anybody, and it'll be fine. It's the same with their treasury holdings, which are also all massively underwater, and the Fed has just backstopped that until March. So they're going to have to do something about it in March again. So we're going to get the next bailout. So it's being artificially basically held up. Winston looks a bit concerned about that, doesn't he? Yeah, so it's a total disaster. But if the banks don't pull the trigger, then it isn't necessarily as big a disaster as it could be, because commercial real estate could recover. It could, right? I'm not saying it will anytime soon. I don't know why, jobs are being cut. Less office space will be required with AI. Outsourcing is happening more. Who goes to shops and buys stuff, right? Retail is suffering. So the whole commercial space is, I think, a problem. It's a big problem, I think. What was your worst mistake you've made and lost money of your money? Why did you do it? Buying stuff I didn't understand. That's generally it. Just going with something that's popular, and then generally you lose a lot of money because you don't understand it. And then you don't know whether you should hold it when it goes down because you didn't understand it and you didn't really know why you bought it. And then, well, you panic sell it because it's down 30, 40%. So that's generally the worst thing I've done. What percentage for stop losses says double wide repairs? It depends on your structure and your system and what you're trading. I don't think you can apply a general rule to everything. You can maybe to like options trades, which is what we do. We said about 25% of max loss usually. But if you're doing a stock position, for example, I do it much, much tighter than that. Scorpion says options watch gives me low volumes. So volumes are trading volumes during the day, the trading day, given the market's closed. You should get kind of zero volume. Look at open interest instead. That's kind of what you want to look at. Bank earnings seem good. Does PayPal benefit from that? That's a great question. Let me, shall we have a look at the live market as we are only 7 minutes away? Well, 7 minutes away from the live market. Let me move over here. So banks are actually all down pre-market, despite pretty good earnings. Microsoft's up, Nvidia is in the green, AMD is in the green, and that's pretty much it. Everything else is not looking so good. Tesla, I could have thought that might be worse, the 1.7% down, given what Elon said. But so far, that seems all right. If we look at PayPal pre-market specifically, also down 1.1%. Earnings, I mean, okay, Morgan Stanley earnings per share was a little low, but they did beat on revenue. Goldman's stellar earnings. I mean, massive beat. So be interesting to see tomorrow what Schwab does. That's a bit of a worrying candidate, I would say. Look how low the earnings expectations are for Schwab. They missed that. We are kind of in trouble. Lots more banks coming in this week, pretty much all banks. And then next week, Tuesday, we get into the Magnificent Seven territory, Microsoft, Netflix, and so on. That could be very, very interesting. I expect those will be really good, but we'll see. Bloomberg is running with the orange one, the chosen one. Trump trounces rivals, advances towards Biden rematch. Trump wins Iowa, indeed. In Davos, apparently, all the hookers are fully booked. Surprise, surprise. And they're warning to risks to the global order. Whose order, I wonder? Von der Leyen's, perhaps. Goldman Sachs equity trading surges, drives jump in profits. See, there's money in trading. And yeah, the upbeat banking earnings don't seem to be enough today to carry the futures. We also have US oil up somewhat, not as much as you'd think. Crude oil is at 78. Still below 80. It's very surprising given what's going on in the Middle East, missiles being fired at US ships and that kind of thing. Microsoft is opening subscriptions to use ChatGPT. Yeah, that is going to be really, really interesting for the Copilot thing, Microsoft Copilot, which is basically what was that clip thingy that they used to have? This was horrible. It's basically that, but you're going to pay like, I don't know, $29 a month for it or something. And are people going to do that? Yeah, heck yeah, because ChatGPT is brilliant for so many things. Is WTI or Brent more important? Good question. Very good question. Sure, to be honest with you. I mean, they move in tandem. They move very, very, very similarly. So I don't think it matters massively. I don't think it matters massively. They tend to move fairly close-ish together. I think most of the world looks at Brent crude. But yeah, I don't know. Clippy, yeah, it was Clippy. Yes, it was Clippy indeed. One of the worst things ever. Why is Apple down? Well, the market is just down overall, isn't it? Because, oh, you mean 2.2%? China news? Something on Apple, wasn't there? Yesterday? What was it? Apple's decision to discount iPhones in China makes a statement. Yeah, that's it. So they're cutting prices, which is not a sign of strength for a brand like Apple. If you're charging like $1,200 for a phone, you shouldn't really be discounting. It's kind of weird, right? It's like if Rolls-Royce offers a discount, you're kind of like, why? So it's not a good sign because they've always been cheaper phones than iPhones. iPhone is an expensive phone. That's kind of part of the brand. So they're obviously really struggling to get their phones out at these price points. Cannabis sector. Actually, we were talking about that yesterday. I mean, it's just very high risk regulation and so on. The last time I did some research on that about a year ago, the dealer on the street corners, cannabis is cheaper than the stuff you can legally buy. That kind of undermines the market, doesn't it? Shouldn't be that way. Uranium is soaring. Absolutely. Have you seen our newsletter on that? goatacademy.org/substack. Should be out today. Yeah, our top uranium stock pick is 170% up. And here's why the uranium bull market is just getting started. So get yourself your hands on that. It's called Trading Floor Whispers. You can get there through felixfriends.org/sub. Sub like the sandwich. So yeah, we've been talking about this for a while. Uranium. One of our head coaches is a former floor trader from the London Metal Exchange. He's a market maker, 20 years trading experience. And yeah, we've been calling this for a while. So read our newsletter, folks. It's probably the one thing you can read that actually has got some real insight in it. Most stuff just regurgitates the news from yesterday, right? The Holy Trinity, you're here for the first time. Good morning to you, all three of you. I appreciate you tuning in. Pre-market is looking a little dicey. Bank earnings kind of like had everything go up and now go down. Morgan Stanley disappointing on earnings. Goldman's actually stellar earnings, but still not really lifting the sector up. And yeah, if you watch the beginning of the video, you'll see why we're feeling a little bit, antsy today, but it'll all be all right. Just to say, watch it from the beginning. Any other questions? Pop them into the live chat. And if you haven't already, make sure you join me live in literally 30 minutes, where I'll teach you how we trade one stock, 3 rules, all fully automated. The trades made $3,492 last week. Took me less than 1 hour. If you want to learn it, I'll teach it to you. And I'd highly recommend everybody learns it, because I think you got to learn how your money makes money for you. And you might decide after you learn that, hey, this isn't actually for me. That's also totally cool. But you'll never know unless you saw how it works. And most people just think, oh, it must be really complicated. It really isn't all that complicated. So come and join me. Felix.webinar. Grab yourself one of the last seats. And is there a best day to get into a trade? Not particularly. There isn't sort of a Monday, Tuesday, Wednesday type is better. No, there isn't. It's more about the chart setup and the kind of positioning that's more helpful. But no, the actual day doesn't really matter. Ding, ding, ding. Is Robinhood good for your trading program? Yeah, it'll do the trick. It'll do the trick. Any broker basically will. Doesn't really matter what it is. Waiting for Tesla to drop to 200. Where is it sitting right now? 215. So this is pre-market. We should now be live. Let me hit the refresh button. Is that already live? Looks it, doesn't it? I think so. Let me just double check. Apple at 182, 2% down. Yeah, something like that. So it's a mixed morning, I'd say. Fat drugs are still on vogue, and banks fairly decent earnings, but so far the market not really excited by it. Apple down 2%, cutting prices of iPhones in China. Ouch. Microsoft, however, is up, launching their Microsoft Copilot, I think, on a broader scale. Tesla, jittery a little. Did you see what Elon said? Elon said he doesn't want to develop AI and robotics in Tesla unless he gets double voting rights. Let's hope he gets it. Dave says, for long-term portfolio, how many stocks is preferable? Is less better as you have more capital each? I would say more than 5, less than 30, something like that. I think somewhere in that zone is probably the sweet spot. Probably more than 10, I would actually say. I would probably say more than 10, less than 30. That would probably be kind of where I'd be in terms of diversification, because it gets really hard to, find more than 30 good companies and follow them, and it's kind of tedious. Do you invest in cannabis? No, do not. Did it once many years ago, and it didn't do very well, and I'm still scarred from it by the ban. I want a bot, give it to him. Talking about Elon, absolutely. I think it's a good idea to give Elon double voting rights. I mean, the guy runs the whole business, doesn't he? Zuckerberg's got it, and Alex Karp has it, and all these guys. So why wouldn't the founder have it? I think there's a lot of sense in that, to be honest with you. I don't know about Zuckerberg's children inherit those double voting rights or whatever they are. That's a bit different, isn't it? I don't know whether that should stick around, but I guess that's the way it's legally structured. You can't really change that. Do you ingest cannabis? No, no. Actually, I consume no drugs whatsoever. Not a fan. The occasional cup of coffee is kind of my drug of choice, but not very often either. Do you have an index in your long-term portfolio, Kyle? I don't, but I literally have a video coming out in a couple of hours today where I'll show you my whole portfolio. You can download the whole thing. I'll walk you through it and explain it all as well. So watch out for that. Make sure you are, subscribed and so on. Do you invest in bonds, treasuries for the long term, short term? I, at the moment, don't have any treasury positions either. I had some at the end of last year, and they've all done very well, and I got out of it, and I haven't really been able to find the same kind of sweet spot trade. Not even wine. Not really. I don't really drink. I have a wine business, funnily enough, but I don't really drink. So I not like, it's not like I never drink, but I just very, very rarely. So no, not something I get into. I like my clear mind. I like waking up without this like fog. I like exercising in the mornings, and I find even if I have like one glass of wine, and the less you drink, the more you're impacted by it, then the next morning I'm like 5% to 10% off peak form, and I don't really enjoy that. How about investing in real estate? Love that. Absolutely. I love pretty much every asset class. It's all good as long as you know what you're doing. And real estate is tremendous. And yeah, big fan. Any other questions, folks? Come and ask them. 25 minutes. I'll be live on the webinar, felixrunstalog/webinar, and I'll explain to you actually how we trade. And if you watched my video from yesterday as well, where I'll walk you through the chart setup, and you watch my webinar, then you really understand what we do. So I'd highly recommend both. And I thank you for tuning in. Lovely to be back at the live market. I miss the markets when they're not live. And I wish you a glorious day and see you in 25 minutes over here. Cheers.